Amidst the global stock market crash, there are greater challenges and investment opportunities. If you aim for monthly returns of over 80%, what I'm about to say is crucial to your success. I know many investors have experienced prolonged losses. To address this issue and help more investors, I have established a dedicated WhatsApp community where you can receive assistance for free. 248 Investment Advisory online service. You can ask any investment-related questions. 3 stock recommendations weekly for high returns. Daily market reports and real-time trading signals. Weekly one-on-one stock trading training sessions. Over 5,000 online members for real-time investment insights. Weekly stock market commentary and investment directions. Exclusive insider trading information every week.
These services will help you achieve high returns successfully. Simply click the link in the video description below to add the investment assistant and experience them for free now.
Grantham, co-founder of GMO and renowned investor, has a track record of identifying market bubbles, having accurately predicted the dot-com bubble burst and the 2008 financial crisis. Recently, Grantham has issued a stark warning, quote, "Stocks are dangerously overvalued and poised to disappoint. The AI bubble is bound to burst, and a recession appears likely." However, amidst his bleak outlook, Grantham is making some surprising moves within his portfolio. What are these moves, and why could they be the opportunity of a lifetime?
For this purpose, we have specially set up a WhatsApp community to share the latest insider trading information. Investors will receive all services, including stock recommendations, in the video introduction below.
In this video, we will uncover Grantham's top 5 stock picks from GMO's Q1 2024 13F filings. Despite his pessimistic market outlook, these investments are delivering impressive gains ranging from 9.5% to a staggering 41%. As we explore these top picks, we will also briefly revisit Grantham's recent grim outlook as outlined in his report, The Great Paradox of the U.S. Market. Jeremy Grantham has made dire warnings that we are on the brink of the largest bubble burst in history. He cites rampant speculation in AI and cryptocurrency markets, reminiscent of past bubbles like the dot-com and housing crises. Grantham pointed out that the S&P 500 Shiller P/E ratio stood at 34 on March 1st, a level in the top 1% of its historical range. Simultaneously, corporate profits are near record highs. This, he noted, is, quote, double counting and double jeopardy, suggesting that stocks could see their earnings multiples contract and margins shrink. He questioned why stock prices, quote, reflect near perfection in a particularly imperfect and dangerous world, citing foreign conflicts, economic weakness in Europe and Asia, unaffordable housing, commercial real estate pressures, climate damage, dwindling resources, and aging populations. Grantham said, "The stark contrast between apparent embedded enthusiasm and these likely problems seems extreme, illogical, and dangerous." Grantham also observed that there's never been a sustained rise in stocks starting from a Shiller P/E of 34 or full employment. Jeremy said, quote, "The long-run prospects for the broad U.S. stock market here look as poor as almost any other time in history." Jeremy compares the recent stock run-up to the rallies before the Great Depression and the dot-com crash. Grantham recalled how pandemic stimulus inflated a multi-asset bubble in 2021, which deflated in 2022 as expected. However, the rollout of ChatGPT, quote-unquote, rudely interrupted this process, inflating a new AI bubble. He believes that AI will follow the pattern of past tech revolutions, with, quote, early massive hype and a stock market bubble, followed by a substantial period of disappointment. Grantham expects the delayed impacts of the Federal Reserve's interest rate hikes, combined with quote-unquote ridiculous speculation, will eventually end in a recession. Despite a foreboding market forecast, Grantham's first quarter 2024 portfolio adjustments reveal a contrarian yet optimistic strategy. His latest 13F filings highlight significant positions in leading tech companies, suggesting that he sees enduring quote-unquote deep value in these stocks despite potential market corrections. Let's break down Grantham's top 5 holdings from the latest GMO filings and what makes each of them stand out. Starting with number 1, Microsoft Corporation, ticker symbol MSFT. Microsoft holds the top position in Grantham's portfolio, comprising 5.5% of his investments. This big tech titan recently beat Wall Street expectations across the board with its strong first quarter financial results. The company reported earnings per share of $2.94, surpassing the expected $2.82. Revenue totaled $61.86 billion, exceeding the forecast of $60.8 billion, with Q1 sales increasing by 17% year over year. The Intelligent Cloud segment, including Azure Public Cloud, earned $26.71 billion, up 21% year over year. Looking ahead, Microsoft projects $64 billion in revenue for the current second quarter. Microsoft's strategic expansion in emerging markets is noteworthy. The company plans to invest $2.2 billion in Malaysia by 2028 to enhance the country's cloud and AI infrastructure. Similar initiatives in Thailand include training over 100,000 individuals in AI skills and establishing a new data center region. These investments are poised to deliver significant returns by expanding Microsoft's customer base to new firms and government agencies in these regions. Grantham's bullish stance on Microsoft is evident from his analysis of the company's financials and strong fundamentals. As of the latest filings, GMO held approximately 3.6 million shares of Microsoft. During the quarter ending March 31, 2024, GMO acquired around 5.98 million shares at an average price of $398.38. Microsoft shares are currently trading at around $422, representing a 19.96% increase in share count. This confident investment in Microsoft underlines Grantham's faith in the tech giant's long-term potential and resilience, even in a volatile market. Number 2, Alphabet Inc., ticker symbol GOOGL. Alphabet ranks second in GMO's investment portfolio, making up 3.74% of the total. Alphabet's Q1 performance was remarkable, with revenue increasing 15% year over year to $80.5 billion, and earnings per share, or EPS, soaring 62% to $1.89. However, a closer look reveals even more impressive results within these figures. A significant 77% of Alphabet's revenue in Q1 was driven by its advertising-related businesses, including the industry-leading Google search engine and YouTube. Notably, Google Cloud excelled, becoming the preferred choice for AI workloads, capturing 90% of generative AI unicorns. This widespread adoption across various industries fueled a 29% rise in Google Cloud's revenue for Q1. Additionally, Google Cloud's profitability improved significantly, with its operating margin increasing to 9% from last year's 3%. Alphabet's stock currently trades well below its 5-year average valuation. If it meets its earnings targets and reverts to an average trailing price-to-earnings ratio of 26, the stock could see a 22% upside over the next 12 months. This presents a compelling investment opportunity. Recognizing Alphabet's strong fundamentals and financial performance, GMO acquired approximately 1.75 million shares during Q1 of 2024 at an average price of $145.31. With Google shares now trading at around $174, this acquisition marks a significant 34.66% increase in share count. Year to date, GOOGL has risen approximately 25%. Number 3, Meta Platforms, ticker symbol Meta. Meta, a social media giant, comprises around 3.62% of GMO's portfolio, ranking third. The rationale behind Grantham's choice lies in Meta's impressive financials and growth potential. In the January through March quarter, Meta reported earnings per share, or EPS, of $4.71, up from $4.32, more than doubling from $2.20 a year ago. Revenue reached $36.46 billion, up from $36.16 billion, with sales increasing 27% year over year, marking the fastest quarterly growth since 2021. Advertising revenue, which forms the bulk of Meta's business, surged 27% to $35.64 billion. Meta anticipates second quarter sales of $36.5 billion to $39 billion. Meta's recovery in advertising revenue has significantly boosted its revenue and profit growth. Additionally, the company is poised to become a key player in the global AI race. Meta is investing heavily in AI, purchasing billions of dollars worth of microchips from NVIDIA to enhance AI applications across its social media platforms and Quest mixed reality headset. GMO bought 178.01 thousand shares of Meta in the first quarter of 2024 at an average price of $419.77 per share. This investment has appreciated by almost 9.5% from current levels. Grantham's substantial position in Meta suggests a strong belief in the company's ability to innovate and capture new markets, reinforcing the bullish outlook on Meta's future trajectory. Number 4, United Health Group, ticker symbol UNH. The fourth top position in GMO's portfolio is United Health Group, ticker symbol UNH, a powerhouse in both managed healthcare and health technology. As a leader in its niche, UNH carries a reduced risk compared to companies searching for the quote-unquote next big thing. Despite some challenges earlier this year, UNH's financials remain strong and impressive. United Health recently announced its Q1 2024 financial results, with revenues growing 8.6% year-over-year to $99.8 billion, beating expectations and reinforcing its dominance in an attractive market. Last year, EPS grew by 13%, with an average annual growth of 14% over the past 5 years. This indicates that the company is not only increasing its revenue, but also improving its efficiency, as EPS growth outpaces revenue growth. From a valuation perspective, UNH is significantly undervalued. Its current P/E ratio is around 18 times, compared to a 5-year average of 25.4 times, indicating a discounted price. Additionally, it is cheaper compared to its peers, which trade at P/E ratios of around 27 times. This strong valuation and robust fundamentals led Jeremy Grantham to acquire around 2.22 million shares in the first quarter at an average price of $510.59. Grantham's investment in UNH has already increased by approximately 13.97%, supporting his decision to invest in this giant healthcare company. Over the past month, UNH stock has risen by more than 8% and is currently trading at around $522 per share. And number 5, Apple, ticker symbol AAPL. In Jeremy Grantham's investment portfolio, Apple stands out as a consumer favorite, comprising 2.83% of its holdings. Despite a challenging start to 2024, with Apple's stock down nearly 18% from its peak in January, recent developments have turned the tide. After facing macroeconomic headwinds and 4 consecutive quarters of revenue decline, Apple reversed this trend in the first quarter of 2024, reporting a 2% year-over-year revenue surge to $120 billion, beating Wall Street expectations by over $1 billion. Particularly encouraging was the growth in European sales, up 10% year-over-year, and a staggering 15% surge in Japanese sales. Recent market fluctuations have enhanced Apple's stock value, reducing its risk profile. Since mid-April of 2024, Apple's stock has risen approximately 14%, currently trading at around $189 per share. Grantham's decision to acquire 1.34 million shares of Apple at an average price of $182.01 per share in the first quarter of 2024 reflects confidence in Apple's financial strength, growth potential, and brand loyalty.